Good night, everyone. Today is Monday, December 19, around 9:30 p.m. New York time, and we're gonna do with a regular daily technical video day. Well, guys, very slow all day. I don't know if it's because Christmas, or I don't know, or it's because the dollar, the risk of trade is getting exhausted. One way or the other. No matter what time of the year it is, what it matters is the price structure right here. And the price structure is corrective. At least it's corrective. What most important is corrective from here. Let me explain to you guys why. This is the US dollar on the 13-minute chart. It's a chart that I use due to the 13 being a feeble number, just in case somebody asks me. Now, like we explained the other day on the video, this can be counted either like a double zigzag, or it can be counted also as a five-way swing. So for me, when that thing happens, I was expecting this last night. I mean, a dollar trend. Now, the reaction from the dollar trend is in three ways, which is telling me that this high should be taken sooner or later. In other words, this high is the equivalent to 124.44 on the euro in the dollar. So that high should be taken sooner or later. Now, which way do we have? Like I say, we have a cycle diameter here, another diameter here, another diameter here. So this can be a contracting triangle. First case, this can be a contracting triangle when we have A, B, C, D working in E to test the trend line, and then higher. That's going to be the faster resolution to this whole issue that we have right here. The second one is, like we explained the other day, that we have A, and then we have a three-way move here, and we're working into a B-way triangle when we have A, B, C, D, E, and we're going to trade lower to the downside. Another scenario is that this is W, and then we have W, let's say the grid right here in three ways, three backs, and then we're going to go down in a series of three-way until find support and then turn higher. That's in the short term on the dollar. Now, if we take a look to the 8-hour chart, let me give you the number that you guys should be expecting in case it is not the triangle. The number I should expect is a resolution around 79.75, which is the 3802 of the proposal wave 3. After 81.20 should top the dollar for this cycle until three ways back happens, and then we renew another leg to the upside. Okay, that's for the dollar. Let's move on to some individual pairs. Okay, guys, on the individual pairs, let's start with the most important which is the S&P cash. What do we say yesterday on the S&P cash? We say that the S&P cash is going to trade lower in 5 ways. Wow. Now, depends on how you look at it. There can be two scenarios on the S&P. All we know is that a cycle should end or should be ending around this area, and that's why we've been saying that 1200 will be tested on the S&P. Now, wave structure, you guys know already. We got W, S, and then A, B, C, Y. This is Y, 3 backs, and then finally we got 3 more ways to Z. If this count is the one in place, S&P battle. Now, a very interesting point is that today S&P soared. It was 14.5 points to the red when the the dollar didn't make the new high. Usually when that happens is because one is leading the other, and usually that's a topping preposition in the dollar. So with that in mind, if this account is the one, then the S&P should start trading higher. Now let me put the RSI right here, and look guys, divergency, bullish divergency on the S&P. Do not necessarily need to be here. All I know is that a cycle ended most likely today, or it's gonna end tomorrow, and then it's gonna trade higher. Now, this is one scenario. The second scenario is this S&P. This S&P is kind of the same count, but it will allow a different result. In other words, you got A, B, C, A, B, C, V, and then a diagonal C wave. 1, 2, 3, 4, 5. Now, this can be W, and then the S&P can either be in B and then start the bounce and risk, which is very likable, because if we take a look at the dollar only allow most likely one more high. All right. Now, let's take a look at a small time frame here on the S&P. Look, this is a small time frame of the S&P, seeing it with a different angle. In the other scenario, we were calling A, B, and Z. Now, let's take a look at the RSI. And look, the divergence that we were mentioning, saying here, lacking momentum, sideways in some degrees to downside. So it's a bullish proposition what we're getting on the S&P. And yes, S&P can trade higher, and the dollar like today can go sideways, but at the end of the day, one is going to catch the other. Now, I want you guys to concentrate in this. This is 5 swings here, if you want to look at it like that. Look, 5 swings with divergency within the 5 swings also. So what do we expect in tomorrow? We expecting a higher risk trade tomorrow. That's what we expecting tomorrow, higher risk. Now, there is an alternative that I want to present to you guys, which is in this scenario. This alternative is calling that what we got today is a B-way low. In other words, that this is S right here, and then we got A, and then B is going to be a bit lower. In other words, this is A, this is B, and then you should divide, this is a clear 3, you should divide these two and 3. You're going to get a rally and risk tomorrow. Tomorrow should be a risk on trade, because all 3 counts in Elliott Wave are calling higher. Now, from there, we should get another test, and then the S&P can go lower to S&P, we trade lower to 1184 before bouncing higher. So either way is a correct structure in my view. It has a channel here well defined. So if we move above the channel, I will start questioning the idea that, there is 3 channels, all 3 channels calling higher tomorrow. That's why when we get now to the pairs, we're going to show which scenario can be likable. Now, let's move on to pairs like the euro dollar very fast right here. Okay, the euro dollar right here. On the euro dollar, now knowing the scenario on the dollar is very, it's very similar. Now knowing the S&P, we can draw to the conclusion that maybe it is a triangle, then it's gonna trust lower. If it is a triangle, you guys can look for a number around 129.06, 128.50 in a trust, and then from there should happen a very good recovery in the risk trade. That's why you guys see that we have positioned ourselves to the short dollar trade. We got two trades, the CAD and the Aussie on the short side, and then we have this scenario that if the S wave is gonna take the form of a flat, then we're gonna get this scenario when we have WS, this is W, 3 backs, and then we're gonna see a rally to 130, 130 before lower. This scenario to here goes with the flat and the S&P. The other two scenario goes with the trust over and higher in the dollar. All right, that's for the euro. Okay, now cable. Let me explain to you guys something. We send the trade to Sir Cable at 156.15. What happened is that if that trade is gonna get filled, it's on the equal legs, and that's if the S&P is gonna trade higher in risk tomorrow. And then we like the chances of the equal legs right here. We like the chances that this is around the 618, and then we know that for sure we're gonna be able to cover the trade. We decided that that's gonna be the trade that is gonna go to find the last leg on the dollar higher instead of the euro. But well, still, cable should make a new low below 154.08. So we're expecting that this is the count. WSY, 3 ways higher corrective, and it looks contracting. So maybe cable is doing a triangle to trust higher before going lower. Now, let's go to the metals pairs. Let's start with the dollar CAD into the 4 hour. What do we have on the CAD? A very interesting and intriguing proposition here. How you can see the CAD in 2 ways. First, we got ABC, WS, ABC, and then possible we're doing either a triangle here, B way, when we're gonna trade here, here, and here to test the trend line, gap fill in the short, and then lower. That's one preposition. The other one is this one. It's the same. The only difference is that this W, but remember, most likely all we're gonna see is one more high in the dollar. So that's why we need, that's what I believe is the card that we need to play. So this one goes with a rally in S&P. That S&P is gonna rally, then dollar CAD is gonna trade lower. It's gonna make here the S way around here, and then when the S&P rally from around 1240 to 11 something, this pair is gonna make the 3 ways back onto lower. Now, it's the same scenario. The thing is that if the S&P, this is what I want you guys to understand. If the S&P goes to 1240, then the dollar should trade to 79.75. Euro to 131.40. Dollar CAD should trade to right here around 102.35, and then from there they should come the last leg. It's one or the other, guys. That's why every pair can show the thing. Now, let's see Aussie. Let's see Aussie. What we are expecting in Aussie, a final destination or final target around the 98.30, 98 area. Into the short time frame, we look like this in Aussie. We look like maybe we're going to trade higher if the case of the S&P rally is taking place. We're going to trade. I doubt it that this is completed as an structure. So it's the same case of the CAD. Trade higher to 145 and then lower back to 98. That can be the case in Aussie. Now, let's take a look to the New Zealand dollar. The New Zealand dollar looks like is either in two scenarios. First one, from the 5-way here, I see 1, 2, 3, 4, 5 swings. If the 5 swings are the case, we need a 7 swing right here. So maybe it's going to trade lower. This goes pretty well with that scenario when the dollar is going to make one more final thrust and gains over. And then we're going to see a rally in risk. And like that, you can see every pair around the market. Let's say the Norwegian crown. What do we see in the Norwegian crown? Same scenario as a dollar. We see 1, 2, the 3, the 4. This was a 5-way swing. We're expecting a 5-way swing here and higher. That's what we're expecting in every US dollar pair. Now, let's take a look at gold. I still like gold to the downside. I believe that we are in some type of wave 4 with more downside, minimum to 1,500. That's what I like in gold. I think that gold is a sell against, I would say, 1,650, looking for 1,500. So in general, guys, what I see for tonight is the idea that the S&P can have found a bottom, that one more high is going to happen most likely in the dollar, and the S&P is within 3 scenarios. Either, first, bottom in place as a flat, bottom in place as a 666, or higher to 1240, 1245 in an S-wave flat, and then lower against to 1280 to 1184. All right? So for tomorrow, depends. If the market is going to buy the dollar tonight and trust for the triangle, then the S&P should have found the bottom. If the market is going to sell the dollar tonight to around 79, 75, then the S&P is going to rally in 5 ways tomorrow to complete an S-wave flat, and then from there, S&P is going to sell again. All right? So let's leave it there, guys.